A once-in-a-lifetime opportunity is in the market right now. Trade deals are being worked out. China and America have talked. We have resolve on the table. The market's fear has dropped. The VIX is down. Things are looking good. But the question is, what stocks should you be getting into? Well, I'm going to discuss those things in this video. We're going to go over the VIX, the fear and greed, and the stocks that you should be adding to your portfolio. And I'm going to address the risks and the data coming up and what it means for the economy. Let's dive right in. Treasury Secretary Scott Bessent said on Monday that a trade agreement reached over the weekend represents another stage in the U.S. shaking its reliance on Chinese products. Through the U.S. decoupling itself from its need for cheap imports from China has been discussed for years. The process has been a slow one and unlikely to ever mean a complete break. However, Bessent said that now specific elements of decoupling in place that are vital to U.S. interests. The U.S. imported nearly $440 billion in goods from China in 2024, running a $295.4 billion trade deficit. We do not want to generalize decoupling from China, he said during an interview on CNBC, but what we do want is a decoupling for strategic necessities, which we were unable to obtain during COVID, and we realized that the efficient supply chains were not resilient supply chains. When the pandemic struck in 2020, demand in the U.S. shifted from one reliant more on services to greater focus on goods. That meant greater difficulty in obtaining material for multiple products, including big-ticket appliances and automobiles. The technology industry, with its reliance on semiconductors, was also hit. What followed was an inflation surge in the U.S. not seen in more than 40 years. The details of the U.S.-China pact are still sketchy, but the U.S. officials have said so-called reciprocal tariffs will be suspended through the broad-based 10% duties will remain in effect. We are going to create our own steel. Tariffs to protect steel industry. They work on critical medicines and semiconductors, Bessent said. We are doing that. And the reciprocal tariffs have nothing to do with the specific industry tariffs. The agreement between the two sides is essentially a 90-day pause that will see reciprocal duties halted, though the 10% tariff as well as a 20% charge related to fentanyl remain in place. Bessent expressed encouragement on the fentanyl issue, in which Chinese officials are now serious about assisting the U.S. in stopping the flow of precursor drugs. Bessent did not indicate a specific date when the next round of talks will be held, but indicated it should be in the next several weeks. So what we're going to look at first is the VIX, which is the fear and greed. We can see this tanked this morning, which is great. We're in between the green and the yellow for the first time in several months, and the VIX is now trying to come back up. There's a little bit of heightened fear that has increased over the past 30 to 40 minutes. Not much, but just a little bit. It was dropping so rapidly, and now it is stabilized. And so with the VIX climbing right now, it is highly related to inflation year over year tomorrow and the data we have tomorrow, Tuesday, and retail sales that we have on Thursday. And then, of course, we got the building permits and housing starts on Friday, which is very important in the Michigan consumer. This is happening all this week, which is very important. As long as all of this data is good, then it's going to just reinforce the tariff talks, which are already strong. And I would expect to see the VIX will probably test the $20 to $21 range, maybe a little bit higher into the gap, 21, 22 as we go through this week. But as long as data comes out good tomorrow and then even potentially on Thursday, the VIX, I see it dipping below 18 in the green possibly this week because of tariff talk. This volatility we see right now is specifically to the data this week, and I believe the data will be good. The inflation tomorrow is the biggest because it's inflation year over year, month over month, and core inflation rate, which is very important, especially the year over year, which we're looking at 2.4 or below. If we get 2.3 or 2.2, interest rate cuts are highly likely. If this happens, pair that with what happened today, and the markets are going to fly. So what we want to look at are some stocks that I would recommend looking to get into. Google being one of them because they're into quantum with Willow. This is a stock that is going to surge beyond $300 or $400 in the next 3 to 5 years, probably more like the next 1 to 3 years. It's a very big player, and they're more than just a search engine. This is a stock I would consider looking at selling puts, trying to get in around 152, which is probably going to be unlikely at this point, especially if data is good. But selling puts at 157 at a good premium going out a month will essentially give you a break-even price of around 154 or 152, depending on how far out you go. So this is a great stock. SoFi, another very strong strong stock. This is a stock that's going to do well even with the tariff talks being rough. And right now they're good. And if interest rates get cut, this is what will affect SoFi. And inflation data tomorrow sets us up for this potential interest rate cut, which will be just one of the 4 or 5 we're supposed to be getting this year, which will be very helpful to SoFi. And that's what's going to make SoFi run. So it's a big opportunity to get into SoFi now and to dollar cost average and grow your position, whether it be leaps or shares, ahead of interest rate cuts, because inflation is definitely holding steady. And if it drops, we're going to get interest rate cuts. And even if it doesn't drop, we're going to be getting them anyway by July. We were supposed to get them in June, and that's if inflation doesn't go down. But it was moved to July. And if inflation does go down, we're going to get those rate cuts probably sooner than later. Meta is another very strong stock right now. It's pretty high compared to where it was recently. Its all-time high is over $720. So right now it's a pretty good bargain if tariffs stick and the deals stick and the data is good and the economy gets better and we get interest rate cuts, then this is a decent price to get in. Also, if you sell put options going out a month for say 600, then you get a break-even price of $585 roughly, or $588. So really anywhere between 600 and 605, 610. If you go out a month, you're still going to have break-even well under $600, which is really good for Meta. Long-term Meta is very good. Very good stock. Microsoft, same thing. Microsoft is going to be the very first $4 trillion company. I've explained this before. They've already passed NVIDIA. This is something to highly consider getting into. And Microsoft has been very strong even before today's tariff talk and before everything got better. Look at this big jump in Microsoft, crushing earnings, 443, market cap 3.3 trillion. They're going to be pushing 4 trillion. I believe they're going to be the very first company based on analytics and data. Everything is pointing to it. Dan Ives also said it. Microsoft is going to be the $4 trillion company of the world, the only one, and this is going to be great. So Microsoft's going to be the first 4 trillion in the United States, and this is looking like it's going to happen. Microsoft's a great buy. The problem is it's just really high right now. And I would rather just go out a month and sell 420 puts or 410 puts to get in at a lower price or wait for a pullback. But long term, anybody who got in like me made a lot of money in January, $20,000 on Microsoft. And I teach this to my students consistently in Discord. That's how we made money in a down market. I called out Microsoft, I called out NVIDIA, Walmart all last month. I made $4,000 on Wayfair, $10,000 on Walmart. I made $5,000 on NVIDIA, and I made like $20,000 on Microsoft. I've made a lot of money on these stocks, and my students have too. And if you're looking to grow your portfolio, maybe you're just getting started, maybe you're losing money in the market, you don't know where to begin, I would love to help you guys. You can sign up anytime, investwithcorey.com. The link's in the information box below. Just click on training and you'll be able to book a call with my team and I so I can help you grow your portfolio. And it's what drives me every single day, helping people just like you to be able to live the life you want to live. I'm in my theater room right now where I can spend time with my kids. I get to hang out with them after school, take them to and from school, and be home all the time. And that's what matters most. And financial freedom has done that for me. So I want to help you achieve the same financial freedom. And I look forward to seeing you real soon. Wayfair is holding steady at $38.82. It was pushing around $40 this morning. I told everyone in Discord, everyone on YouTube to buy Wayfair when it was $31 and $32. I told you guys that Wayfair would run, and here we go. We were just waiting on tariff talks. This is going to be a very strong stock going forward as long as the tariffs stay where they're at and the deals are in place and China and America work everything out the way they said they would. And if it gets better, that'll be even better for Wayfair, especially if the interest rates get cut, and affecting Wayfair more than other stocks because they get a lot of stuff from China and they rely heavily on China. Although they did say that if tariffs didn't get better, they have alternate routes to getting products into the United States and to survive and grow their business. So either way, looking very strong for Wayfair. AMD, this is a very particular stock doing very weird things. It doesn't really matter how bullish the market is or bearish. AMD went down less than most other stocks when the stock market went down, and it went up less when everything else went up. It's a very bearish to neutral bearish stock, and it keeps switching between bearish and neutral, but it's struggling to go up price compared to its peers or other stocks in the sector. And I believe a lot of this has to do with the growth of the company and Lisa Su having word salads and avoiding questions and fumbling. It really honestly falls on a CEO. And I think that 60 to 70% of AMD's problems are hers. Sure, she saved the company, but after a long period of time, people get tired of seeing the same individual in control, especially when the growth has stopped and the expectations are not met. So we have to forget about what she's done. We have to forget about the past. Right now, today, what are we doing today? And I just don't see her fitting the needs of the company. And I think a lot of investors are turned off by how she handles a lot of these meetings. Like, just look at Starbucks. They changed CEOs, stock flew. Same with Nike. They need a refresh. And I think, honestly, in my opinion, I just don't think she's cutting it. That's my opinion. Wouldn't be surprised if she steps down or gets replaced somehow, somewhere or another in the next 6 months to a year or sooner. Wouldn't surprise me. Will it happen? I don't know. But I personally think that's part of the problem. She either needs to go or she needs to change how she's doing things. And I think even if she did that, I don't know if that would even help. At least not at this point because of how long it's been. Tesla is running again. We have a break of structure and a change of character. Next target price to break on Tesla is 330 and again 366. This is a great stock in my opinion, but at the current price, it poses some risk because Tesla investors are pretty much stuck waiting on robotaxi and robots and the outcome of that because automotive sales are declining and revenue has declined. And that, I believe, is also related to inflation that we had over the past couple of years. Tariff talks also hurt it. The fact that they have had their own issues aside from that, other issues dealing with Elon and the presidential election and whatnot. There's a lot of things that have gone into Tesla that have created a very uncharted territory. But if they can live up to their expectations, a great stock and a great buy. But right now, it's a little too risky for me to touch. I wouldn't want to touch that. Affirm is another stock that will do well when the interest rates hit. Tariff talks have helped it, but not very much because they don't really import anything. So it's not really an effect there. The interest rates affect Affirm more than the tariffs do. So inflation tomorrow, I'm hoping, goes down. It looks like potentially we could get 2.2 or 2.3. If we do, then we'll get rate cuts announced very, very soon. And when that happens, Affirm will fly. Affirm, SoFi, Bank of America, New Holdings, all affected by tariffs and the economy, but mostly affected by inflation rate and then in turn interest rate cuts. Whereas Wayfair, Amazon, Apple, these stocks more affected by tariffs. And then, of course, the whole market's affected by tariffs by its sentiment. So it's a very big opportunity. If you can't afford to get into a stock, you want to buy Leap options and you want to make sure you keep it under 10% of your portfolio. You don't want any more than 10% in any one sector or any one stock. So you want to make sure to keep that organized and safe. In my opinion, the stocks you should be looking at right now are Microsoft, Google, Meta, SPY, and NVIDIA. AMD kind of on the sidelines right now. Wayfair, very strong. Walmart, even stronger. Amazon is okay, but I prefer Walmart. SoFi and New Holdings are also good. Grab is good. And I think with trade talks, NEO will also do good. NEO, very good stock to look at right now, especially at its current price. Find your favorite stocks. Look at the charts. Understand what's going on. With the data we got coming out this week on inflation and the potential rate cuts, and you pair that with tariff talk and deals with China, this week, we have a recipe for a very big once-in-a-lifetime opportunity to get into stocks now before they reach their 2024 highs and even higher that they were projected to go this year, earlier in the year and last year by Tom Lee and other analysts. And if we expect those stocks to still go to those highs, there's a lot of money on the table, especially if it exceeds those highs. And right now, we're way lower than we were last year. So if you really look at it, this is a buying opportunity, especially because of the confluence we got from the trade talks. Everything is looking very good. Thanks so much for being here, guys. I'll see you on the next video. If you're looking to sign up for coaching, Discord access, and you want to grow your portfolio, I would love to help you. You can sign up at any time at investwithcorey.com. Links in the information box below. Just click on training and you'll be able to book a call with my team and I so I can help you grow your portfolio. Take care of yourselves, guys.